welcome back to Friday on Crypto My God. Guys, I just want to talk about the upcoming trend, which is really this confluence, this convergence of the equity markets, of the crypto markets, of what we call RWAs, real world assets. Let's just dive right in. So this whole thing is moving pretty quickly as we see TradFi adopting crypto really in the purchase of Bitcoin and making these like reserve treasury kind of companies. But that's not really the technology merging into what they're doing. In fact, there's a lot of activity going on in traditional finance trying to explore like what is the real use case here, right? We can settle products, we can make funds, we can sell it to people. Like where is the juice? But we're starting to see a lot of technological partners come out and kind of unlocking the opportunity of what can be done. So recent announcements include Denari, a sort of bridging component of a company between the TradFi rails and the blockchain rails. Now, what Denari is doing is they actually just received their broker-dealer license. So this allows them to broker trades, to broker deals, right? And to conclude trades on KYC'd assets, securities, equities, things of that nature. Their approach to this is to actually say, hey, we want to bring sort of these tokenized stocks into other platforms, into things like Aave, into other dApps and basically come out being like, if you're looking for liquidity, if you're looking for assets, if you're looking for real yield, Denari is going to be sort of the middleman venue to connect on these things. And the reality is that a broker-dealer license is something that's fairly hard to obtain. It involves frequent reporting to the SEC and compliance, and it is just one of those roles that sits as a middleman, enforcing the rules of regulators upon the people conducting the deals. Now, we are seeing things, Plume Network and Bakkt are also companies looking to compete in the RWA space, and the chance to offer popular stocks like Tesla, Apple in tokenized form. So this is something that is very attractive to people. And again, Denari's take is that they're not selling it directly, right? Unlike retail brokerages like Charles Schwab or Robinhood, Denari will work with other companies to integrate its interface into their platforms instead of offering its services directly to customers. So you can think of this as like a white labeled solution, but they can take those assets and they can move them into other people's interfaces. They're not competing with the retail dollars. They want to facilitate the growth and the scale of other DeFi apps or other brokerage firms. And of course, we have news from my alma mater, Republic, who recently issued what they call a mirror token around SpaceX equity. Now, this is not true ownership of the SpaceX equity and should not be confused as such. You do not have the rights to ownership. What you do have is exposure to the upside. Now, the real kicker here is that if you wanted SpaceX shares and you're in the US, I mean, really, they're private shares. You need to find a buyer and you need to be an accredited investor. This is the rules around private equity investment. Accreditation means you either need to have $1 million, make over $250,000 a year, and it does not include your house equity, your home equity. So that's like a bit strange, but through Republic and their crowdfunding license, they can open this up to people. So your mom and pop, your standard retail could buy like $50 of exposure to SpaceX's upside. Now, this is through a pretty convoluted series of investment vehicles. Again, it's not direct issuance into that equity. And the way that it works is that if the thing goes public or there is some sort of sale vehicle, they will likely liquidate it and return that upside to you in cash. But, it is fun because it is exploring some of the leeway that is now open through the SEC and tokenization writ large. And quite frankly, to date, this is the only way for a normal person to try to invest in SpaceX. So that's really fun and novel. Is it the perfect format for an asset, right? Are the investor protections of equity there? No, they are not. But it is the only choice at the moment to provide these private shares, which is SpaceX, a private company, to the retail public prior to any sort of IPO. Now, of course, there's other apps like Mass, and Mass is not available to US citizens. This is Europe and beyond, but they are already trading tokenized stocks. Mass started as a on-ramp to DeFi. They have perpetuals and trading. They use Hyperliquid as their back end, so you can begin to see how these primitives, these DeFi primitives, are actually being built into really nice and robust phone applications. But they do have a very simple user interface. You can trade up to 100 markets with leverage that's supported by Hyperliquid. You can trade US stocks and ETFs, and you can swap assets. I mean, very basic crypto stuff, but this is pretty fun that they're trying to put all of finance together in one simple application. Of course, pulling in that data from RWA on-chain does require a bit of finesse. Blockchain is really good at dealing with digital data, data that it can access and that it can pull from. These are called oracles. Now, RWAs, real-world assets, a lot of their information is sitting in filing systems. It is offline, or it is just simply not connected to the blockchain. So there are a lot of products coming out, like Jiritsu, which is using artificial intelligence to basically verify tokenized assets, to say, hey, this token is really backed by what it says it is, or to facilitate, let's say, a withdrawal, and only permitting people to withdraw when the actual money that it represents is indeed there. So this is verifying what is off-chain, bringing it on-chain in the financial world, and using a lot of artificial intelligence for it. So we can see that this RWA push is not only on the front ends of selling these equities or RWAs directly to users, but there is an entire infrastructure platform being built out. And just to show how big of a deal this is, this confluence of these technologies, the old financial world and the new one, we see Coinbase is seeking US SEC approval to offer blockchain-based stocks. They obviously want this. And Robinhood submitted this tokenization memo to the SEC, which is actually a pretty fun read, in which they're pitching why tokenization of RWAs will transform market structure and provide numerous benefits to market participants, as well as reduce risk to the financial system. And what they're basically saying, tokenization can enhance transaction settlement. Generally, settlement has been T+2, which means 2 days after a trade to settle. On blockchain, as long as we have good data, like what Jiritsu is performing, we can see that these assets are indeed there, and we can settle a trade nearly instantaneously. For an on-chain trade, like an actual crypto token, a native crypto token, you can achieve what is called finality with immediacy. With an RWA, you do need to have some sort of lag in order to confirm that these assets are there. Now, tokenization allows for better price discovery and more capital formation. We can take things and we can kind of bring them like an IPO, right? As long as they're digital, we can do the ICO mechanism, and we can create liquidity and garner capital because, again, these are smart dollars. And things like USDC, like USDT, these stable coins, they are programmatic money. And once we get these into the hands of AI agents, they will constantly be in flow. The velocity of money is very important on blockchain. It's important in the real world too. It's just not as fast in the real world. There's intermediaries that they have to go through, and just frankly, it's not programmatic. So once we can treat money like we do data, we open up an entire world of new products and developments. And of course, they say the programmability of tokenized assets would aid compliance. And there's no reason for an intermediary in this world. You can basically pre-code applications to say, hey, if it's out of compliance, it just does not execute. So that's a pretty clear win. And anyway, they go on furthermore. If you're curious about what Robinhood's pitch to the SEC is, it's actually a fairly straight legal documentation, and it's quite exciting. But what we can take away is that everyone from Robinhood to Coinbase, clearly we're going to get Charles Schwab, E-Trade. Fidelity's been running an Ethereum node since the 2010s, somewhere in there, 2012, 2013, something to that effect. But what we can see is crystal clear is this confluence, this convergence of assets, just assets of all shapes and sizes. And they will range from equity in amazing companies doing amazing things all the way down the threshold to shit coins, meme coins that do absolutely nothing. Either way, finding out how to bring them all together into one seamless app is how we move forward in this internet of value. And of course, we will see assets like video game skins. And what we can conclude is that we're building a world where if you can grab attention in any digital format, you can create and harvest value in the realm that you participate in. This opens up a lot of new opportunities for how the world will operate, for what jobs look like in an AI-based world. And this is really just thinning that veil between meat space and cyberspace, right? We're going to have AR glasses that can overlay AI art, which would be NFTs. I'm already seeing numerous art frames come up that are essentially televisions, and they can make art that moves. Again, an NFT makes a lot of sense in this world, but the thinner that veil gets, the more we will want asset ownership in the digital world, and we might also want that ownership to cross into the real world. I mean, even so simply as selling something in digital for dollars that you can use to buy something in the real world, like a house or a hamburger or coffee to some effect. Either way, the trend is immensely clear that this is the path that we're moving towards. There is so much energy and momentum going into it. And I imagine that by the end of 2025, we are going to start seeing serious platforms releasing and launching these sort of everything apps regarding finance, regarding predictions markets, regarding sports betting. It's all coming together under one resource. And in so many ways, that presents a huge opportunity for the tech titans of Coinbase, Gemini, Robinhood to compete with the traditional finance companies of brokerages, of banks. And that transition should be enough to get you excited because it gets me geeked. With that being said, stay safe out there. Don't leverage up. I'll see you next week.